What's going on? What's going on, team? Welcome back to another week. Welcome back to another Money Monday. Welcome back to the channel. If you guys are new here, make sure to smash that like button. If you guys aren't subscribed, make sure to subscribe. We do these videos every single week, presenting you guys with the hottest opportunities for the week to come. So make sure to watch these, like these, turn on post notifications. That way you guys are in the know and aware. What we usually do is we hop on, we go over a quick recap from the previous week. I'm going to link that video right up here so you guys can reference back to that video and double check what we talked about last week and how it performed and what I'm going to be talking about right now. Not all of them are going to be in that video because a lot of the stocks are going to be the stocks that we talk about with the team. However, part of them are going to be from the videos that we post here. That way you guys can reference back to. After that, what we usually do is we talk about the S&P 500, we talk about the NASDAQ, and then we're going to be talking about 5 opportunities that are presented for this week that you guys can take advantage of and add to your watch list and trade or invest in if you guys see value in. And I'll explain to you guys why I see value in those stocks, why I believe that they're great opportunities. So let's jump right on into it. The first thing we're going to do is talk about the recap. Before that, let me go ahead and say we will talk about Tesla. We're going to be talking about why we do believe that it's still going to crash. I wouldn't say it's going to crash super bad, but it's definitely going to have a pretty significant correction. We've talked about this for the last 2 weeks. So again, the video that I linked earlier and the week before that, if you guys go to the channel and check out the videos, the last 2 that we talked about, we've been talking about Tesla. We're going to touch on it today, why we think it's going to actually drop and what to expect next, right? So let's go ahead and jump into the quick recap. So last week we talked about LCID. That one gained 25.84%. We talked about X. That one gained 4.68%. We talked about QS. That one gained 10.35%. We talked about APRN. That one gained 13.13%. We talked about Hood. Robinhood. That one gained 7.35%. We talked about RBLX. And we talked about that as a short play, and that one actually dropped by 7.28%. We talked about Tesla. That one gained another 8.66%. We talked about Coin. That one gained 8.13%. We talked about Starbucks. That one gained 10.32%. We talked about, let's see. We also talked about AA. That one gained 4.21%. We talked about Amazon, 6.12%. We talked about Apple. That one gained only 2%. Still a gain, though. We talked about Uber. That one gained 7%, and so on. We also talked about Snap. That one was just been consolidating, and it is starting to break out throughout Monday. We started seeing a breakout, and we're actually going to be talking about it today as well, is one of the opportunities. So that's the recap from last week. Let's go ahead. I'm going to share my screen. We're going to jump right into it, and I'm going to tell you guys what the situation is with the SPY, what the situation is with the NASDAQ, and then we'll talk about Tesla, and then we'll also talk about the 5 opportunities. So let's go ahead and jump into it. Let's share my screen. All right, so looking at the S&P 500, that's what we're going to talk about first. Would I talk about Tesla first? Absolutely, but this does have an important role as to what I'm going to be talking about in Tesla. So I do want to go over this first. So the first thing we're going to talk about is the S&P 500. So looking at the S&P 500 from a technical standpoint, the first few things that we noticed right off the bat, right? We had highs back here before we pulled back, and now we're at new all-time highs. We're at 470.65. Super overbought on the RSI. MACD, we're obviously gotten a signal that we're starting to drop to the downside. We don't have too much volume demand up here. So we do start seeing a lack in consolidation. Not to say that it can't go higher. It could possibly go higher. We do have a resistance right up here at this channel. So we did enter back into this channel that we've been trading in basically since the beginning of this year, all of 2021. And so we're approaching the top of it, right? It doesn't necessarily have to go all the way to the top. However, we are starting to curve and curl a little bit and potentially break into below the EMA, right? So if we're going to take a look at the EMA here, that blue line, we are already looking like we're starting to break to the downside, and add that to the RSI indicator that we're seeing here, showing us that we've been overbought and now we're starting to trend to the downside. MACD is looking the same way. The only thing that, we should be paying attention to is the infrastructure bill that, is trying to be passed. So depending on how that goes, we'll see how the rest goes. So obviously with QS, that had a strong impact on it. We saw a massive rally. A lot of other stocks similar to QS also had a very significant rally as well, just based off of it passing in the House. So paying attention to the S&P 500, we're starting to see weakness, a little bit of consolidation, and potentially a reversal. I wouldn't say it's going to go down too bad. I would be looking for levels on the downside at 450, 460, potentially the 50-day moving average, but 460 would be the bottom channel trend line. We tend to correct and kind of hover in this area. So we do come down, usually down to the 180-day moving average, and that would even be below where our support level is. So like I said, I'm not thinking that we're going to drop all the way down to here, where it is possible, but what I'm looking for is this bottom channel trend line support level. And that's what I'm going to be paying attention to for it on the way down. So not saying that it's going to crash right now, but definitely something to pay attention to and add to your watch list, and pay attention to it potentially dropping, because if it does continue to break below it, we have seen a tad bit of, hovering a little bit below the EMA here. If you guys take a look at that blue line, a little bit below, but most of the time it keeps returning back to the upside, just because we keep pushing up and up and up, right? So we'll see if this actually breaks to the downside. We do need to see confirmation of a break below it, like we saw back here where it broke below and then it stayed down, right? Same thing here. We got to see it break below completely, right? We're not completely broken below it yet. So we'll see what happens on Tuesday and through the rest of the week. But if we do continue to trend below it, expect this to come down. I would be looking for a target around 450. So that's basically what's going on with the S&P 500. Taking a look at the NASDAQ, that's SPY, what we just talked about, SPY. Taking a look at the NASDAQ, that's /NQ is what we're looking at. It's going to be very similar to the SPY, right? It pretty much trends very similarly for the most part, not always, but for the most part. So not too much to say here. Overbought looking, we're selling off on the MACD as well. Momentum's shifting. And once again, new all-time highs here, and we're potentially starting to break below the EMA. So very, very similar setups. But like I said, Tuesday and the rest of the week is really going to tell us what's going to happen. We could very well continue to push higher slowly, but I would be anticipating a sell-off in the near future, just because we are in those overbought territory levels. So I wouldn't be hoping for it to continue to rally indefinitely. We have been rallying for the last few weeks, basically the last 2 weeks, 2-3 weeks, I would even say. So at some point, it needs to have a little bit of a breather and pull back a little bit if it wants to continue higher, right? So that's just the way the markets work. They usually do tend to pull back. So do anticipate that. We have been very, very overbought here for quite some time. So definitely something to consider and pay attention to. That way you guys have a realistic perspective of what's going on. So the next thing we're going to talk about is going to be Tesla. So you guys might say, for the ones that have watched the previous videos, you guys might say, hey, well, you've been talking about Tesla selling off for some time now. You've been talking about it for the last 2 weeks, right? So if we look back for the last 2 weeks, that is a fair statement to say. However, like I said on the very first one, it's at that point where the reward the risk exceeds the reward, right? So for me to go long on this, even though we can definitely trade it intraday long, but for me to go swinging it for a long period of time is not probably something that I would recommend or, do myself, right? For the last 2 weeks, we've been in and out, in and out, in and out. We have not been holding it throughout the whole entire time, simply because we never know when it's going to start pulling back, like what happened over this weekend, right? Where we saw it at 12.17, and then boom, we opened up in pre-market at 11.47, and that's basically where we closed today, 11.50, right? So we don't want to experience those drops, those uncontrollable drops, because we don't know, we can't control what happens after hours, right? So it can happen at any point. So it's easier for you to trade it throughout the day, take your profits, come back the next day if it continues to be rallying, right? So at this point, we have finally gotten our indication of it potentially selling off. Not to mention, Elon Musk did run a survey or a poll, I would say, on Twitter, talking about whether he should sell 10% of his Tesla stock or not. And so he said that basically whatever the poll shows, that's what he's going to do. And the polls showed that, yes, he should. By 58% said yes, he should, and about 42% no. 42% said no. So it looks like he will be potentially, if he holds his word, which I anticipate he will. I do believe that, if he does begin to sell his position or sell his stock, we will experience a significant pullback. Not to mention the previous reasons why we've talked about the pullback happening in the first place, right? So looking at the chart, we have that zero, the mean line right here. We've got +1, +2, +3 standard deviations, right? We don't hold +3 standard deviation for too long. It doesn't stay, the price action does not stay in that area for too long. And as you saw, we approached it once, got rejected, tried to break through it, didn't break through it too much. We did pretty much hug it, came back up to it, and now, boom, we're starting to sell off again. So if we do break below this 50-day moving average, do anticipate a potential continuation of this sell-off to occur. I believe personally that it is to come, obviously with Elon's statements that he's made and claims, right? That's also just going to push it forward or propel that sell-off to happen a little bit quicker. So that's obviously the main reason that we're looking at it to sell off is those standard deviation levels. If you look at how high it is, right, from when we started talking about potentially, looking for it as a short play, it's only gained approximately 13%, right? So if we were to measure our risk to where that support level is, we're looking at about a 22.8% risk for a potential 12% profit potential. So obviously your risk is exceeding your reward. Obviously you can manage your risk, but when something is up this high and it's at these standard deviation levels and your risk is exceeding your reward, why would you consider obviously going long on this for a longer period of time? And I can guarantee you that there was people at 1250, 1,250 buying in, thinking it's going to continue to go higher. People who haven't watched these videos. So if you guys are watching this video, props to you. Take this in, consider this. Obviously do as you believe you should, whatever you see value in. However, obviously when you're going to be looking at, the stock itself, make sure that you're considering the things that we're talking about before making those decisions, right? Everybody's an adult. Everybody can make them decisions for themselves. So at this point, it's on you. RSI selling off, we're at 43. MACD's showing, momentum to the downside. And obviously we're approaching that 50-day moving average to break below it. So from current price points, my target, if we're going to look at the daily, it still remains at what we talked about initially, right? We do have some gaps to fill, right? And so at this point, that's what we're looking at. So the first one, looking back, right? The first one is going to be from 1145 to 1119. That's going to be the smaller gap, the one we can fill pretty much in the short term. But in the big picture, we still have this gap down here from 910 all the way up until 950, right? And so I do anticipate we do see this pullback happen to the support level, and that's about a 22.42% drop. So that's what I'm going to say about Tesla. I am bearish on the stock itself at the moment, right? Not on the sector, not on the, not the stock overall, but in the short term, I am bearish on it. I do believe that it's going to pull back. And looking at the daily too, if we just look at the patterns, we are starting to see a reversal pattern forming here on the daily chart. And usually this is going to be signs of a potential sell-off, right? So make sure that you guys are paying attention to all of these signs. We're also obviously starting to see a little bit less volume coming down. So that, consider that as well. So that's what's going on with Tesla. That's what I would say pay attention to. That's why we believe that it's actually going to continue to drop. So just something for you guys to consider and make sure that you guys are aware of it. Add it to your watch list regardless. Take into account what we just talked about and make your decisions from there. So from here on out, we're going to talk about the 5 stocks that we are watching throughout this week and for the next week or 2 to come. And the first one is going to be Zillow. So Zillow, we did end up seeing earnings, and then I saw a significant drop happen right after earnings happened. So after that, we obviously have been seeing a little bit of consolidation. We are looking at this on a daily chart. So let's go ahead and add our support level down here, obviously where we stopped selling off. If you notice, we talked about those standard deviation levels. We ended up dropping from our mean all the way down. So our mean level is right over here, and we ended up dropping to -1. Doesn't mean that, it's obviously going to recover right away after that -1 has been touched, but these levels do act as resistances and as supports as well, right? It's not just the ones that you can draw. So let's go ahead and jump onto the 4-hour chart. Obviously, after earnings, we saw a significant drop. Let's go ahead and measure that with our measuring tool. So earnings happened, and then boom, we saw a drop of approximately 31.11%. So I'm not saying necessarily that it's going to recover to those levels or new all-time highs, but I do anticipate that we're going to begin to see a recovery here in the near future. I would say the first level that we should be paying attention to would be this level right here, just because it was acting as a support. So now it's going to be acting as a resistance on the way up. And that's going to be this level right here at $83. So using these support levels where we had support previously, after breaking below it, it's now going to be resistance. So on the way up, we're looking at about 23%. So it's not 30%, but 23% is not bad, right? Obviously, Zillow, if you guys haven't heard, they ended their home buyer program. So that's essentially kind of what caused a lot of the selling and a lot of the panic. It's still I would say uncertain as to how it's all going to get resolved. However, or how Zillow is going to perform over the long term. But what we do see from a technical standpoint is we do see that opportunity. That's the first thing. And the second thing is we do see that the stock itself is super oversold. And on top of that, it has began its momentum to the upside, right? Not to mention, looking at the EMA here, this blue line, it looks like we are about to, or we're attempting to break through it. So that would be where we would be looking for an entry position. And that would put us at about 21.55% profit potential if we do jump in after that confirmation of the EMA break to the upside. That being said, make sure to stay patient and make sure to get that confirmation, because it can very well continue to sell off if there's just a lot of negative, sentiment around Zillow right now. That, as I said, this is an opportunity. This is something that we are watching with the team, and that is what we're paying attention to. Obviously, it can very well recover all the way up to here. So that would be about a 50% profit potential. Once this whole, the earnings and the negative news all kind of dies down, we can obviously start seeing a massive recovery happening. But that being said, the first level we'd be watching is 82, 83 on the way up. The next one, 180-day moving average, which is about 89. And then after that, that next level of resistance at 104. So that's what we're paying attention to with Zillow. The next one that we're going to be taking a look at is going to be Snap. So as I've mentioned in the last, the recap, earlier in the video, we talked about Snap. It was on our watch list and it was moving. We did see a little bit of profit happen on Snap. However, now we have finally seen a break through that 50-day moving average, which is this purple line. We saw a break through it, which is a positive sign. We do see a lot of positive momentum happening in the MACD, and the RSI is starting to rally to the upside. We are starting to potentially approach these overbought levels, but we're not just there yet. We're at about 60, which is we still have ways to go. So I would say the first level after that we're going to be paying attention to is that 62 level. Obviously, we do want to see it recover all the way to 72. But let's talk about, we got to do step by step. We got to pay attention to the levels as they come at us, right? We don't want to speculate. We want to go off of the charts, off of technical analysis, and what we can logically, using technical analysis, predict that would happen, right? Obviously, use your risk management. Obviously, we are above the EMA, right? We're above the EMA, the blue line that we've been above. The EMA has broken above the 50-day moving average, which is this purple line. Two bullish signs. We have been looking very bullish here on the RSI and the MACD. And so, like I said, those would be our targets right here. So 62.29 for the first level, and then 68.36 for the next one. And obviously that very top previous levels before earnings would be our ideal, take profit zone, so 74.42, we'd be managing our risk at approximately right below where the support was. So 4 or 5%, even if you go down to as low as the support level, you're looking about 9%, right? Obviously, I would say 9% is a bit much. So I'd be managing it at about, right below where these support levels were, which is approximately 4%. So you're risking 4% for a potential 32%. So risk to reward is there. The opportunity is there. I do strongly believe that this will start seeing a recovery because of these reasons. So, this is not financial advice. Do what you see value in, but this is definitely an opportunity to consider and add to your watch list if you guys are looking for stocks to consider for this week or even for the next few weeks, because this can take a few days. Obviously, we've seen a lot of positive momentum happen here on Monday. And if you guys aren't on the team, I do invite you guys to check out the link linked in the bio or the description of this video. Those that were a part of the team, they did get this entire list, not just these 5, but the entire watch list on Sunday night. So they were able to take advantage of this 4% move that we saw just today on Snap, right? So this move that we ended up seeing today, they were able to take advantage of that 4.19, about 4%, right? So this right here, like I said, this can very well continue to go higher, but do manage your risk, right? So that's what we're looking at. That's going to be the second stock we're looking at. The next one is going to be Twitter, TWTR. It's a very similar setup to what we see with Snap. We have just been consolidating basically ever since we saw this drop after earnings. Once again, very similar setup. We haven't seen this break through the 50-day moving average though. So this one we do need to stay a little bit more patient with, right? So we have the 50-day moving average right over here. And then we do see that price consolidation happening in this channel between that 56 level and that 52 level, right? We've just basically been consolidating. We did break above this blue line, which is our EMA, right? We did break above that, but we have seen that happen before, and then it continued to consolidate. So what we're really paying attention to for the most part is this 50-day moving average at $55.64. Once we see a break above that, obviously we're going to be looking at our next level of resistance, which is going to be about 4 or 5% away at 58. The next level after that is going to be 62 at 1143. So that would be a recovery to previous levels prior to earnings, right? We do still have plenty of room to run on the RSI. MACD still having that positive bullish momentum. So that's what we're looking at here with Twitter. Great opportunity for either intraday trading or for swing trading, right? But make sure that you're managing your risk. The next one's going to be Fiverr, FVRR. So Fiverr here, taking a look at Fiverr, we are starting to curl down from this resistance level or from the support level that we were at. We ended up touching the support level and it looks like we're attempting to break above it. Plenty of room. We were just oversold here on Friday. Monday, we ended up opening higher and just basically didn't get too far here with the actual stock itself. We did make gains, but we didn't get too far. So in Monday's trading session, 2.33%. Again, if you guys are in the team, you guys were able to take advantage of it, but we haven't seen that bulk of the move yet. I would say we're still waiting for that to happen. We ended up selling off for the last basically week and a half to 2 weeks. And so now we have earnings coming up. So I do want to make sure that you guys are aware of this. Earnings are coming up on the 10th. So make sure that you guys are managing your risk if you guys are going into earnings. And if you guys are already holding Twitter or Fiverr, my bad, make sure that you guys are managing your risk when going into it. And if you guys are not in Fiverr just yet, wait for that confirmation to happen, right? Wait for that break above the EMA, this blue line, this baby blue line. Make sure to wait for that confirmation and the move to happen. Even if you get in, not even now, let's say you get in at 167 and it recovers to, let's see, the next level of resistance right up here, that's 16%, right? And that's with confirmation, right? So why would you gamble when you can be certain, right? But that being said, we do have earnings happening. And I would say we are lining up for a pretty decent recovery, right? So the big picture, if we zoom out, we can see that we are at quite a bit of a deal, right? We're at these levels that we saw back in May. And so after that, we touched that level and then we busted up all the way to 257. So this can very well happen again, but just be sure to manage your risk as you're going to be taking advantage of this, right? So once again, plenty of room to run on the RSI. MACD, we are starting to shift momentum into the bullish momentum. So this is about to break that EMA. So pay attention to that EMA. And as soon as you get that confirmation, that is when I would begin to consider this as a great play. That's why we're watching it for this week. And so the last two that we're going to talk about is going to be RRR. So this is Red Rock Resorts. Let's go ahead and take a look at this on a big picture first. Big picture, taking a look at this, you can clearly see how we've consistently been trending higher and higher and higher and putting in higher lows and higher highs, right? So that being said, we also continue to see 180-day and 200-day simple moving average acting as a support. Every time we come down to it, we tend to see a push to the upside. Patterns do repeat themselves. They don't have to. But in this case, we are very bullish, right, on the stock itself, right? If we're taking a look at the RSI, we can see that we're super, super oversold, and the MACD can clearly see the momentum beginning to shift. We're starting to indicate positive bullish momentum. And as you can see, we are at that 180-day, 200-day moving average, right? We did see earnings. It didn't, act as a positive catalyst. It actually acted as a negative catalyst, but it brought us down to this 180-day level. And as you can see from history, right, we tend to bounce at this level. Not saying it will, but it gives us a stronger foundation to our theory and to our thesis that it's going to begin to recover. Obviously, we're managing our risk. If you guys don't know how to manage your risk, shoot me a comment in the comments section, contact me over Instagram, or join the team, and we're going to be able to figure that out for you and help you do that. That way you can protect your capital while still taking advantage of these moves. So from current price points to those previous highs, we're looking at about 15.57%, right? And that is just to those previous highs. We do tend to put in new higher highs as this continues to grow, right? So we're looking at about 14.5, 15% from current levels. We are super, super oversold, and the MACD is starting to curve to the upside. We do find this as a support, the 180-day. So we like that. And we are just basically below this mean line on the standard deviations, basically touching this -1 standard deviation, which is acting as a potential support level, right? So taking a look at the EMA, it looks like we are going to attempt to break above it, especially if that momentum starts pushing to the upside. Earnings, we don't have to worry about that because that already passed. And so obviously on the RSI, we have plenty of room to run. So I do really, really like this setup. I like what this stock is presenting. I like the historical pattern to this chart, and I find this a very, very attractive opportunity. So definitely add this to your watch list if you guys have not added this already or don't have this stock, and make sure to pay attention to it throughout this week and the next week to come. I do believe that we have a very great chance at potentially putting in new highs if the market stays bullish, the overall market stays bullish, right? So that's RRR. And the last one we're going to talk about is going to be GRMN. And this is Garmin, right? Very similar. We do have an alert set right up here, right above the 180-day moving average. And we have put in, great movements already. We talked, again, the team knew about this on Sunday night. So, they were able to take advantage of this move that happened here on Monday. So let's go ahead and measure this move on Monday to see what this was. We ended up closing out at 3% above where we opened just on Monday, right? And taking a look at, obviously, let's zoom out to the big picture. We have been very, very bullish on this stock, very similar to kind of RRR, consistently holding the 180-day as a support. And then we had a huge price swing out to that 170 level. Let me go back. To that 178 level. Huge price swing to that level. And then we ended up seeing a sell-off ever since. We have been holding basically this 50-day moving average. I would say more so the 180-day moving or the 100-day moving average, which is this red line. The simple moving average has been acting as a resistance. Every time we came up, got rejected, came up, got rejected. So from current price points, I do anticipate that first level of rejection to be at that 100-day simple moving average. That's about 7.25%. And that puts us at about $156.90. So that's going to be our first price target. Obviously going to be managing our risk at approximately, I would say 3.6, I would say 4%. So if you have a potential of about 7.42, I'm managing it at about 3-4%. That would be a great risk to reward ratio. And that's just, obviously to the level of rejection. So I would take profit at this level, approximately 156, and I would potentially, see where this goes after that. But if that's just based off of the historic rejection that we've been seeing over the last basically month, I would say month and a half, even more, basically 2 months. Over the last 2 months, we've seen rejection at that level. So I would say, this would be a very, very good a level to consider taking profit. Not to say that it can't go higher all the way back to 178 or the 180-day moving average, but we're looking at patterns, right? And we do tend to see that it gets rejected at that level. You can always get back in if it does continue to break higher. However, at that point, I believe if we approach this level, that would put us in the overbought less territory here on the RSI. MACD would probably start getting exhausted out of, the momentum. So I would say, that would probably be a safe level to, I wouldn't say bet, but a safe level to consider taking profits at. So that's it, guys, for this week's Stock Talk video. Hope you guys enjoyed it. If you guys liked this kind of content, or if you guys have gained any knowledge or have been able to lock in any profits off of the videos that you guys have been watching, make sure to smash that like button. If you guys aren't subscribed, make sure to subscribe. About half of you guys that watch these Stock Talks and these Money Mondays aren't subscribed. And I'd love for you guys to get this information every single week. And that way you guys can help the channel out and I can help you guys out. And we're both going to win, right? So as always, I'll see you guys on next week's Stock Talk video, and good luck in the market this week.